Americans can rest assured that our banking system is safe.
From taking loans at extremely high interest rates to living below your means to pay off your debts, banks are notorious for exploiting people with their intricate web of money and credit. But to understand how they exploit us, we need to understand how money works. Our system for making money has its roots in a time when war was celebrated and the idea of the strong ruling over the weak was considered noble. Back then, creating a class divide was seen as necessary for building a strong nation. Banks, even today, operate in a way that supports these old-fashioned ideas. But times have changed, and nowadays we aim for fairness and equality, officially at least. Yet, we are still stuck with an outdated system where all our money is essentially borrowed from banks, whether it is in the form of digital money or physical cash. Centuries ago, people like Jacob Fugger became incredibly wealthy by seizing control of resources like silver mines. But today, controlling money means controlling a lot more, like who gets hired, what gets made, and even who holds political power. It's not just one person but a whole group, governments, big financial players, and bankers who benefit from the way money is created. The global financial system. Our global financial system is extremely secret. This makes it hard for regular people to understand how it all works. But what's really being kept hidden is a big deal. The way banks create money sets off a chain reaction of harmful behavior, making it tough for most people to get ahead in life. Essentially, it's letting the bad guys win, and it's not an exaggeration to say that this could put our world and our very survival at risk. Unfortunately, not many people are paying attention or speaking up for change, at least not yet. You might believe that banks are reliable organizations that will protect your hard-earned money. But what if we told you there's more to the story? That banks don't just hold your money, they create it. We are all familiar with money. It's what we use to buy goods and services. Nowadays, it's mostly digital with numbers in our bank accounts. These numbers represent our ownership of money, and if someone tries to take them unlawfully, we expect legal repercussions. But what exactly do these numbers signify? The numbers in our accounts represent how much the bank owes us. Legally speaking, that debt is ours. When we make payments, it's a simple transfer. Some of the debt the bank owes us gets passed on to someone else. This is how bank currency operates. It is essentially debt moving around as a way of settling transactions. So what exactly does the bank owe us? In the past, it might have been gold. Nowadays, digital figures are generated by the central bank, which is part of the government. These figures are then given to commercial banks, sometimes free of charge, in processes like quantitative easing, but these figures are just entries in a ledger. Money creation. Money is essentially created out of nothing. While that might sound okay, the reality is that this money is created as debt, leading to a cycle of control and influence. We might assume this is just the way things have to be, but could there be another way? Absolutely. Money could be created in a similar manner, but without the debt aspect and without favoring particular groups. We could restore the true essence of democracy and freedom if we abandoned this outdated practice. But for the time being, misinformation and secrecy continue to protect the system. When a bank issues a loan, it is essentially creating money. If a banker were brutally honest, they might say, "We are agreeing to owe each other $1 million. You can use my debt to pay people, and in return, your debt to me becomes an asset in my books. Plus, you'll pay me interest." It's a win-win. This process might sound confusing, and that is why it's been a secret for so long. But it's high time we acknowledge the truth. Most of the money in our economy is created by commercial banks through loans, and that is something people are finally waking up to. But banks also destroy money. The reverse process of money creation. When a borrower pays back a loan to the bank, that loan disappears. It's like it was never there in the first place. It's a reverse process of creation. Here's what actually happens. The borrower gathers enough money digits either from the bank or elsewhere to settle the debt. Then, the borrower hands over ownership of those digits to the bank, essentially turning the debt into a debt that the bank owes to itself. And it is not just the debts that vanish. The assets linked to them also disappear. That includes the money that belonged to the borrower and the loan asset owned by the bank. This cycle is a crucial aspect of bank money. It allows for the continuous creation of new money, generating profits for both the lender and the borrower without necessarily increasing the overall money supply. Profits can be repeatedly made from the creation of money, unlike with physical cash, where the profit is a one-time deal. With bank money, profits are extracted in an ongoing cycle, shifting assets and income from those who labor to those who amass wealth. bank money differs from traditional commodity currencies in several key ways as well. For starters, it is created discreetly and then rented out at interest. Secondly, it is distributed to specific people, benefiting both the bank and the borrower. And finally, once its primary function of generating profit for the bank and the borrower is fulfilled, it is destroyed, completing its monetary cycle. But why have banks been allowed to control the money supply? Bank control over money. Bank-controlled money has become dominant worldwide. While it benefits a select few, it often puts the majority at a disadvantage. However, several practical factors have contributed to its widespread adoption. Firstly, bank money offers convenience. Secondly, some of the profits generated by banks are reinvested to benefit those with bank accounts. Thirdly, the people and organizations that gain from the private money printing process have enormous power over governments, frequently with a large staff overlap. The alternative is allowing governments to regulate the money supply, but historically, it is proven to be ineffective. Government-controlled money, whether in paper or digital form, has frequently resulted in overproduction, leading to inflation and hyperinflation. However, unless they commit fraud or depend on public funds for bailouts, banks are limited in their ability to create money by their own self-interest. They must ensure loan profitability, which naturally limits their money creation. This brings us to how they profit from the money supply. How banks profit. Whenever a new way to make money pops up, like a successful business or a new type of asset such as digital personal information, banks create new money and give it to people who want to make a profit. Here's how it works. When you put money into your bank account, say $1,000, the bank doesn't just lock it away. They only have to keep a small part of it, let's say 10%. The rest? That's where things get interesting. The bank can lend out the rest, like say $900 to other people. But that $900 only becomes real money when it's lent out. So the bank essentially makes new money by giving out loans. But banks also charge interest on the loans they give out. So not only do they create money from nothing, they also make a profit by charging interest. This sets off a cycle where the amount of money keeps growing as more loans are made, and when an economy relies too much on loans, it becomes very fragile. Just think about the 2008 financial crisis, for example. Risky lending practices led to a crash in the housing market, which caused a worldwide economic crash. But it is not just about making money. Credit also plays an important role. Credit cards, loans, and mortgages allow us to spend money that we don't have, which is a loophole banks use to their advantage. Credit can be helpful, but it can be dangerous if you are not careful. You see, every time you use your credit card, you are borrowing money that you'll have to pay back later with interest. And if you can't pay it back on time, those interest charges can really add up and trap you in a cycle of debt. This happens to millions of people every year, leading to serious financial problems. But if we understand how banks work, we are a step closer to saving ourselves from their traps. But the question is living a luxury lifestyle on credit worth becoming a slave to the global financial system? Let us know in the comments and subscribe to our channel for more videos just like this.